Welcome to the Bounty Zero X podcast. I'm your host, Angelo Adam, founder and CEO of Bounty Zero X. Bounty Zero X is a decentralized bounty hunting network powered by the BNTY token. Today is October 23rd, 2018, and my guest on the show is Benedict Chan. Benedict is CTO of BitGo. BitGo is the market leader in institutional-grade cryptocurrency investment services, providing institutional investors with security compliance and custodial solutions for blockchain-based currencies. Benedict started building on Bitcoin and blockchain in 2012, working on a number of projects, including wallet platforms, key management, and early blockchain identity management. Prior to BitGo, Ben also spent time at Microsoft on their conversation understanding platform and was a quantitative analyst doing automated trading during the volatile period of 2007 to 2009. So Benedict, thanks for coming on the show. Good to have you.
Hey, thank you very much. I'm very glad to be here and have the opportunity to speak with.
Yeah, so tell us a little bit about BitGo.
Yeah, I think you put it very well, talking about institutional grade cryptocurrency investment services, providing investors with security, compliance, and custodial solutions for blockchains and blockchain-based currencies. We started out in 2013 and we built our business on reputation at the time, selling security and technology to the companies that were building crypto trading markets. We provided many of the exchanges with scalability and security wallet platforms. And over the years, hundreds of exchanges and institutions around the world use our wallets, be it via the API or through the UI. And over the past year, we've been working on financial services. We have received the trust charter from the South Dakota Banking Division just about a month ago, making us the only qualified custodian purpose-built for digital assets. This is a natural move for us from our strength in security and our desire to make digital currencies usable for everyone, institutions and everyone.
So BitGo has been around in the cryptocurrency space for quite a long time. It was founded in 2012 or 2013, is that correct?
Yeah, that's right. It was 2013 by Mike Gauchi, our CEO. And at the time, we had the first web multi-sig wallet for Bitcoin.
Who was your first client? Was it an exchange?
So, we started out with a lot of friends of Mike and friends in the Bay Area and in Silicon Valley that were just looking into Bitcoin and hearing about it through the circles we had over here. So they were mostly actually consumers. Where we actually started to get our real paying clients and enterprises. Our first client, I think, of a size that people will remember now is actually Bitstamp. This was back in, I think, 2014 or early 2015.
So Bitstamp, they're an exchange. So tell me a little bit about that client and what kind of services you provided for them back then.
Bitstamp is an exchange. They're one of the earlier exchanges in the crypto space. They have Bitcoin trading, Ethereum trading, and Ripple and so on. What we do for them is we provide the wallets on their backend. So whenever you see an address on Bitstamp to deposit in, we create the wallets behind that address. And we track those deposits, and we also basically, whenever they're doing any transactions like withdrawals, we are part of that process. So we not only help them to construct and create the software for them to sign the transactions, but we also act as a co-signer, meaning that every transaction that Bitstamp is signing also is signed by us, and we're able to review that transaction before it goes out to the blockchain.
And do you know what they had before they hired you to develop this type of solution?
I think at the time they were Bitcoin only, and they were just connecting directly with Bitcoin D. And the Bitcoin D package is great as a consensus package for Bitcoin. Over the years, the wallet package I think has been a separate developed on a kind of in a separate way in such that I think Bitcoin Core is more interested in thinking and developing the consensus part of the package. And so, our platform is pretty much the only enterprise wallet API that can, scale really well, not just for the Bitcoin wallet, but also connect to multiple blockchains like Ethereum and Ripple and Litecoin and Zcash and Dash and so on in a very, safe and scalable manner. I think that they had an event back then that basically had them looking for a new secure wallet. And our wallet had always been API first on the back end. So, we we didn't really build it as kind of just a UI wallet. So every single request is through the API, which we built from the ground up to be pretty scalable. I mean, I still remember that back in the day, like you said, our transaction count was mainly consumers before then making very manual transactions. And it was a really nice experience to be able to work together with them to integrate with their existing software, which actually hit Bitcoin RPCs and make it work for our wallet.
So then that integration was a success. Did you guys afterwards continue to perform maintenance and upgrades of the service for them? And do you continue to do that for some of your clients currently, where you build out the infrastructure for them or the back end for them, and you have this software, and then you have a continuing process of maintaining it?
Well, what we actually do is we provide them with an SDK. So we don't actually build the backend for them. They have other aspects to their systems. I think they have accounting systems, especially on the USD side, and trading systems. We don't build any of that. We provide them an SDK with which they can perform blockchain transactions. And over the years, we've upgraded that SDK to, firstly support more blockchains, but secondly, to upgrade how Bitcoin works as well. And I think one of the biggest upgrades there has been on the matter of fee optimization and transaction construction in such a way that when you're running a very high scale wallet, you need to be very wary about how you spend your unspends and how you manage your unspends when you have many inputs coming in. At the same time, you're making transactions every minute. So there's a lot of technical upgrades we make there. But I think I would say the biggest notable one that everyone knows about or should remember is the SegWit upgrade. And I think this happened about a year ago, and everyone said SegWit was one of the scaling approaches to Bitcoin at the time, and that it was adoption of SegWit. Everyone was looking at that, seeing how successful was it going to be, would it be enough to help scale Bitcoin, and we were one of the first to push that out to Bitstamp, which and the rest of our customers, which meant that they could actually take advantage of some of the free fee portions of SegWit transactions that make it cheaper, make some of the biggest blocks. So I think with our transactions, we run typically about out of every block, about 10 to 15% of the transactions we're involved in. As a result of this, we actually got, in some cases, when they were performing consolidations, some of the largest blocks at the time.
That's quite an impressive statistic. Tell me about how the business grew from there. So at the time you had how many employees, and tell me a little bit about the path that the business has gone down since 2013 when you got your first enterprise client, and then I'm assuming you were approached by other companies and started giving other companies this service as well.
Firstly, it took us a little while. We were hoping to, create a wallet that everyone could use. And to some extent we have, but at the same time, we figured out that product market fit for the business was really best as a kind of a B2B business model for us. And the reason for that is kind of twofold. Firstly, it's that our main product at the time was multi-sig wallets. And while it's really good for individuals to use and increases security, it's totally a necessity when you have more than one person managing a Bitcoin wallet. You don't want to be doing that with a single sig wallet, because then you get into problems where anyone could spend and you wouldn't know who actually took the money out. That's one of the reasons why we went after the enterprise market and they actually started using us. And the second reason is to do with the nature that we had some kind of competitive edge on the platform side of the wallet APIs that let us scale really well and provided some value to, again, enterprises. And that's how we came up with, we gradually found our business model. It took us a while to get, consumer or enterprise. By then it was, I would say 2015, 2016. And I think if you remember, that was, not exactly a bull market for Bitcoin. And we have always been a fairly pragmatic company. If you look at BitGo, we try to go after, innovations and technology that work today and that bring, volume today. And in that line, back then, we didn't want to, hire too many people. We still remained at about, I would say, 10 to 15 people all the way until 2016. And that's where we started to start wrapping up. And one of the reasons why we started that was because we did a big deal with the CME, the Chicago Mercantile Exchange, and we were, integrating with them to tokenize gold and create a blockchain for gold. And so we started to increase the size of our team then. That went on until I think early 2017, where, everyone started to see this huge new pop and in a number of cryptocurrencies that exchanges wanted to list and that people were interested in. And that's where we started to hire more aggressively. We could clearly see the demand and the value that, that was being sought. And so now we are about 100 people in total. We have a development team of about 40, and we have other like DevOps and product people, and that puts our product team at around 60 in total.
Your client portfolio, how would you segregate it? Would you say it's like 90% exchanges or like 60% exchanges, and what different markets do your clients consist of?
So the markets question is a little bit easier. We actually have a fairly distributed client base across multiple regions. And usually our clients are some of the leaders in each region. For example, we have Corebit and Upbit in Korea. They're both really, really good exchanges in Korea. We have Coins.ph, which is in the Philippines. And, we have Bitstamp in Europe and so on. And I think that the way we've been seeing it is that there's a lot of exchanges that, especially the ones that do fiat to crypto, that emerge as leaders in their individual countries that have been using us. So far as the market is quite well distributed. For the kind of types of users, I would say we're about close to half on exchanges versus everything else. And we're ramping up really quickly on custody. So that's the fastest growing segment for us at the moment.
So you mentioned before the CME Group partnership. So that was an initiative between CME Group and British Royal Mint, where they were developing a platform allowing institutional traders to trade RMG, or Royal Mint Gold, which would be a digital token issued by the Royal Mint, I guess, redeemable for gold.
Yeah.
Yeah. So is that currently active? Is that currently being traded? And what's the status of that?
It's not inactive, but it's clearly not been as publicly accessible than some of the other gold-based projects that are available on Ethereum today. I still have hopes that it will, with institutions like CME that are very respectable, you want to take the time to get it right. I have hopes that someday it'll get there. But at the same time, over the past couple of years, we've seen a little bit of a move away from just being about private blockchains, which was pretty much a narrative back in 2016, to this year having more about public blockchains and scaling and how to bridge the gap between traditional finance and public blockchains and enable large institutions to be able to invest securely and with confidence in things like Bitcoin and Ethereum. And that's where custody, I think, comes in.
So I want to change topics and talk a little bit about the company culture at BitGo. So BitGo was announced as the winner of Entrepreneur's Top Company Cultures list. What do you think makes BitGo's culture so unique? And
well, I wouldn't want to say too much compared to other company cultures. I've just been at a few companies, and big and small. But what I really like about BitGo is that I think for us, we value ownership a lot internally. So many of our people are very passionate about what they work on. We believe that crypto has, the potential to, radically disrupt financial services, to do things like Bitcoin. And I think that we've always had kind of ownership in the sense that everyone has the ability to own and drive whatever they're working on. And this could be as small as whether, you're driving, say, something like a webhooks feature. You would be taking control of that and driving it to completion and feeling like it really belongs to you. Or it is as big as, let's release, Zcash on the platform. And I think we give everyone a lot of stake and a lot of control and respect and trust and confidence as part of that. And because we have so many great people here that are so passionate about it, I think we really also care a lot about the craftsmanship of the product. And, I like to think about it as, I hope that, people that use our service feel happy. And I hope that they smile at the end of the day. And it's a little bit for me as if, it doesn't matter if it were just about engineering, but if I wasn't an engineer and instead of building code, I was building houses or I was, cooking you a meal, I would want to see you smile. And I still want that. And I think that's a big part of how you encourage quality as part of work. And then lastly, I think we have a lot of open communication over here. And I think it's absolutely necessary for those that, were in Bitcoin when times were a little bit more tough. We had many camps. Some of them were talking about big blocks, small blocks, big blocks. Why? Because, want to get more people on the platform. Small blocks because of, preserving decentralization and immutability and so on. And talking about all those trade-offs. And it was very important for us to create an environment where everyone could speak their mind in a respectful manner and assess, all of these views, and everyone could have their own opinion. And we didn't want it to be like, you have to listen to this or it has to be one way or the other. Yeah, so I think it's very, very important to create such a place where people can speak their opinion.
And are you guys based in the Silicon Valley area?
Yeah. So we are in Palo Alto, in California, which is the South Bay of the Bay Area.
And how much of your development team is based locally, and how many workers do you have remote?
So when we actually started out back until the end of 2016, I would say percentage-wise we had more remote people, but now we have, I would say, at least 3/4 are actually local. I think when we were still in the more infant stages of Bitcoin and blockchains, you really wanted to hire people from within that space. But since last year, everyone's been, really interested in this, and we've been able to find many people that were really enthusiastic about working on on crypto.
So what have you found to be some of the challenges with scaling the company and the structure of the development team so that you guys maintain efficiency? And tell me a little bit some of your DevOps and planning you do for your development roadmap.
Well, to be honest, I actually feel most of those challenges are not really crypto specific. They're mostly engineering management challenges that would happen for any company that's growing from 30 people to 100 people. And, when you grow up from being a bunch of guys in a room that, I can go over and tap your shoulder and say, hey, is that thing, going to ship today? There's a lot that becomes different in terms of how you track projects, but how you also break down projects and dole them out and, have everyone else also aware of what everyone else is doing. So we had to introduce, an agile scrum process. We work on 2-week sprints. And I guess I don't really want to dive too deep into it, but I would say that there are other parts of software engineering that you need to kind of that mature as part of the software development lifecycle as you grow the size of the company. For instance, and it wasn't like this is the case, at BitGo, but it is in some startups. When you have less than 10 people, anybody can push code onto production at any time they want. But when you reach a size of BitGo's and with the kind of security implications, you really want to be creating processes and different environments that go through that code goes through for testing and code review and quality and end-to-end runs and so on, and approval processes before code actually gets shipped by a release manager or someone with such a role to ensure that whatever gets into production is of a basic quality, and that there is no single point where someone can release any code out there that may be malicious if they were to get hacked or anything like that. So it's a lot about removing single points of failure as well. Earlier this year, we also announced that we had obtained the SOC 2. So it's a systems and operating controls for security, which is actually quite valued by some of the larger enterprises that we work with.
So you guys announced that you received the SOC, and that was a year-long process where Deloitte did an independent audit of BitGo and did a thorough review of your processes, controls, and documentation around your security. And I think I read that you guys are also having another independent audit performed for like a level 2 or a type 2 report. Is that correct?
Yeah, that's right. So type 1 is basically they audit you as of a certain date, and at that date they can they try to ascertain and ascertain that you were following all the processes. And with type 2, it just generally means that it's an ongoing date, meaning since the last report we have been following the processes.
So since the company was founded and you guys have grown, tell me about how your role at the company has changed, and tell me a little bit about your day-to-day activities now compared to what they used to be.
Yeah, I mean, when we first started out, I was working a whole lot more in the code as a platform lead. I actually was very, very closely involved with the Bitstamp integration, for instance, and that was very interesting to me. And as the company has been growing, we've been integrating with more and more enterprises and customers. And I feel like I take my role has transitioned a little bit more into engineering management, growing the team, keeping the engineers happy and able to continue doing their work, and more on a high-level architecture side and on looking at the product roadmap and looking at the space and doing a bit of research and development on what we could be working on next.
So I also now see you guys had a Series B round recently. So was there a Series A round before that?
Yeah, so the Series A round was actually very, very early on, and that was back in 2014.
So tell me a little bit about the Series A round and some of the details, if whatever you feel comfortable talking about with respect to the Series A.
I think Series A was about 12 mil back in 2014, and I think one of the rather known investors at the time was Barry Silbert, a digital currency group, and I think that they've made a lot of great investments over the years. But I mean, that's been a while ago.
After you've completed the Series A round, you raised around 12 million. And at the time, do you remember how many clients you had and how much revenue you were bringing in?
I think it was pretty much zero revenue, and mostly the clients were consumers.
So then you use the funds to start building out your team and growing the company and generating revenue. And then the next round was the Series B round. Is that the next fundraising round you guys held?
Yeah, that's right. So we raised a Series B round towards the end of last year. It was led by Valor Equity Partners, which is participation from David Sachs, Bill Lee, and also DRW. DRW is Don Wilson, and they pretty much they are Cumberland Mine. They're more commonly known in the crypto space as Cumberland Mining, but they have non-crypto. They're very known for non-crypto work as well.
So you also had Goldman Sachs Principal Strategic Investment Group.
Yeah. So last week we announced that Goldman Sachs and Mike Novogratz, which is also coming into the Series B1 round, and I think it was a strategic investment that I'm quite happy about.
So you guys have raised $57.5 million in the Series B. Congratulations on that round with some big names who participated in it. So as one of the principal goals of the round, one of the upcoming milestones is to reach $1 trillion crypto wallet. So that doesn't literally mean that you're going to have $1 trillion in a single wallet, but it means that you'll have access or in some way associated with $1 trillion worth of cryptocurrency funds. Can you comment on that a little bit?
Yeah, sure. So we raised a fair amount of money, and one of the large lines of thinking along this $1 trillion mission is that we want to make sure that the crypto space is ready to provide enough confidence for the mainstream user to put his money in. And the reason why we want that is because we're very passionate about crypto and its adoption, and we're envisioning a world that is going to be fairer and more transparent and inclusive and have better markets than ever before. And as part of that, having this $1 trillion wallet is what we think we will eventually get to in a few years. If you look at how quickly wallets went from $1 million to 100 million, and then from 100 million to $1 billion, it happens pretty fast when the price of the underlying crypto does a 10x. And the way we think about it is that if we don't build for $1 trillion crypto wallet, when the time comes, it will happen really quickly and we won't be ready for it. And I think one of those examples where it can get dangerous is like in the case of I think everyone knows the famous like coin check exchange that lost quite a sizable amount. I think you can look up how much it was, but the point is, when they first started storing the crypto assets, they really weren't worth much more than a few mil. But as the market started to improve, more and more people started depositing, and the value of the underlying of the asset as well went up by 10 times or some large factor. And so it wasn't that when they built it, they had probably built it wrong, but when they built it, it was for an amount much smaller. And I think if you think about how you would secure a few $1 million versus 100 million, it's something that you don't do in the same way at all. And that's why I think we should be thinking ahead of getting to the trillion, because that's why, we're all here, right? To get more adoption and get crypto in the hands of more people.
So as part of the announcement of the new product you're offering, which is the custodial service, you received the approval by the South Dakota Division of Banking, which approved BitGo as a trust company in South Dakota. And you are the first qualified custodian for storing digital assets. So tell me a little bit about how long this approval process took and some of the steps that were involved with receiving this approval.
It took about close to a year, but I wasn't myself involved in the entire process, but it involved multiple trips down to South Dakota. I mean, South Dakota is where many trusts go to set up. I mean, and it took them going back and forth with us a lot to understand some of how what we did and how our wallets secure cryptocurrency. And I would say that they had, a fair amount of questions. They were genuinely concerned about how customer funds were being stored. And again, I can't say too much because I was not the actual person that was involved in the day-to-day of that, but it took, about a year.
So what can you say about your cold storage solutions that you have? Because there's obviously like security considerations. You don't want to disseminate too much information about the internal workings of your security.
Many people know BitGo as being a multi-sig wallet where we hold one of the keys and the customer holds two of the keys, and this is our non-custodial product that we've had for some time. And the great thing about that is that it's distributed in terms of risk and in terms of where the keys are physically, as well as from a process standpoint, because you have two different companies, the customer and us. And as much as possible, we did want to preserve that. So with the trust, we have a BitGo Trust Company, which is in a different physical location. So the keys are being stored, in a different, geographically different place from where the BitGo co-signing key is stored. And pretty much it runs on top of the BitGo platform, which has been securing, all these exchanges with our co-signing key for quite a while now. So we've built this on top of what we already had. But we've added, additional processes and security on top of that for just specifically for custodianship. With custodianship, sometimes the right thing to do is actually focus more on getting it right than getting it fast. And that may mean things like introducing a time delay, introducing video IDs. I think that those processes are all part of what we've been learning from, I would say even traditional institutions on how they secure any valuable assets, not just crypto assets. And we've been able to take a lot of learnings from that. And I think that's great. And we, put it on top of our existing platform.
So who did you consult with when you developed this custodial service?
Well, that's the physical aspect of it. So how to build a vault is not something that is what we invented. And I don't think it should be something that we invent. There's a lot of great hardware out there to build vaults and to put Faraday cages to prevent Wi-Fi from coming in and out from the vault and so on. And we've taken best practices there. But I think that's on the physical side. I mean, the what you see a lot with vaults are the physical aspect of having the thick wall and the finger keypad and all those cages and all that. And I think that it's important to recognize that we've also taken a lot of the processes that these institutional banks and trusts have been using, and really taken those approval processes and the compliance that goes into part of being a custodian, and taken a lot of those learnings and put it into this product.
So tell me about the clients that you have for your custodial service, what their business model is, and how they incorporate the BitGo custodial service into their business. What types of companies need custodial services, and why do they outsource it versus doing it in-house? And
commonly, one of the reasons why a business may want a custodian is because they may actually be compelled from a regulatory compliance standpoint. So when you look at managing money, if you're managing your own money, the requirements for how you store that are pretty much on you, and you can decide whether how and where you want to store your assets. When you're managing someone else's money, then these requirements and regulatory and compliance requirements become a little bit higher, as they should, because it's not your money, it's someone else's money, and we want to care about how you take care of someone else's money. One of the big reasons for this is that you really want to have the reporting in place that the money is there, or the funds or assets are there. For instance, you don't want to have a case like where you have a Bernie Madoff case where someone is accepting money and they're actually running a Ponzi scheme and they don't really have what they say they have in the bank. And so there are a few institutions that we're working with because of that requirement for a qualified custodian. At the same time, just many large enterprises and hedge funds are also, not the most enthusiastic about controlling and having their own cryptographic keys. And this is going to be something that I think always happens. If, as a hedge fund, most hedge funds, they don't secure their own gold. And so in the same way, they don't want to have to secure this asset. They'd rather use a custodian for that.
And what is your service fee? Is it a monthly service fee? Can you talk about the types of engagements that you enter into with your clients?
It's fairly broad, as you say, and depending on the service, for some of our businesses, it's a platform as a service. For some of the custodian businesses, we have a assets under custody fee and a transaction fee.
And so with the custodial service, you recently announced that you are supporting 57 different ERC20 tokens and also Dash, Stellar, Zcash, in addition to Ethereum. So basically, your institutional clients can hold a basket of various digital assets.
So that is our intent. We have grown that list. I think we have more than 90 supported tokens and coins at the moment. We do want to be able to help our clients store and secure and also provide regulatory compliant custody for these assets. And we're committed to continuing to do that. I think this doesn't mean that we can support every single coin. There are too many coins out there to support all of them, but we're trying our best. I think that so far as this is concerned, we are one of the leaders in this space in terms of being able to support the number of digital currencies on the platform and in custody.
So I want to shift gears now and finish up. I want to be mindful of your time since we're at the 50-minute mark. So what are you guys working on with respect to tokenizing Bitcoin?
Well, at the time when this podcast goes out, I think it will probably be announced. We're working on a project called WBTC together with other members of the community in Ethereum space, Kyber Network and Republic, and I think about another 10 other projects that we're really happy to be working with. And it's going to be a wrapped Bitcoin token on Ethereum. And what that means is that on the Bitcoin side, we'll be taking custody of Bitcoins in a proof of reserve manner. and issuing Ethereum tokens one-to-one on the Ethereum network. These will be ERC20 tokens, so they'll be compatible with the standard and all the dApps and DEXs and decentralized exchanges out there, and it will enable them to use the stability of Bitcoin. In that right now a challenge that decentralized exchanges have is that they can't necessarily represent a Bitcoin pair, like say Bitcoin Ethereum, on the exchange, and with this they will be able to do that. And I think that's really exciting for us, both as a tokenization effort, kind of working together with the community on that in the DAO, and also for custody purposes, as well as just looking at the impact that it could bring to Bitcoin, specifically with regards to enabling Bitcoin to be used with smart contracts and also potentially faster transactions.
Decentralized exchange could have a wrapped BTC token that is tied to Bitcoin and backed by Bitcoin. So for each token, it would represent a certain number of Bitcoin.
One, yes.
One Bitcoin.
It's going to be one-to-one, and it will have a full proof of reserve. We're going to have a website that states where all the Bitcoin is, and we'll provide proof that we have it. And every time we mint a token on the BTC side, it will be approved by other members of the community.
The stable coins that are out there now, Gemini recently announced their US dollar stable coin. And do you guys support custody of these types of tokens as well? And
yeah, so firstly, I think that having a stable coin is very, very necessary in order to actually be able to work with real world cases in a smart contract. Say if I wanted to do an insurance contract with you for a plane ticket, even, and my plane ticket is in 3 months, and I want to insure it, against, say, me falling ill at the time. If I insure it in terms of ETH, becomes a little challenging because the value of that contract could go up or down by 50% by that time. And so that does seem to pose some adoption challenges. So for that reason, I think having a stable coin to provide a stability of value is very good. In terms of, for BitGo, providing custody of those stable coins, is something that we look at as tokens. I don't think that you could say that just because we provide custody of a USD stablecoin would mean that that coin would always be redeemable for USD. It merely means that we would be able to secure the keys behind that wallet. So having said that, we do plan on supporting most of these tokens because I think that they are an important part of the ecosystem. I think there are very many of them right now, and I'm interested to see how that plays out.
One other quick question, maybe briefly mention that on October 28th, Zcash is going to be having a hard fork at block 419,200 when the block is mined, and there's going to be an upgrade, a significant network upgrade to the sapling release.
Yes. So far as supporting the hard fork, we will be supporting it. The way that Zcash has worked with the community so far has been good in making sure that everyone was supporting it before they performed the hard fork, to prevent any weirdness with a split, which is not what we want at all, and it's not probably going to be what happens. It does require a fair amount of maintenance work to keep updating, but that's what we are here for, and we take all the complexity of that away.
My guest on the show today has been Benedict Chan. Ben is CTO of BitGo. It's a pleasure having you on, Ben, and we'd love to have you on again in the future. Thanks for listening to another episode of the Bounty Zero X podcast. Please remember to subscribe to our podcast below. check out bountyzerox.io, the #1 bounty hunting platform where you can complete work and earn cryptocurrency. Please consult your professional financial investment and tax advisors before making any investment in initial coin offerings. Bounty Zero X does not provide investment or financial advice and does not endorse or recommend investment in any ICOs advertised on the Bounty Zero X podcast or website.